What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our Monday morning market open live stream. We are seeing a very nice recovery pre-market as a lot of stocks are flying back higher, especially crypto. Crypto is on the move as Ethereum is back over 3,600. We got Bitcoin back over $106,000. So we're seeing a very nice momentum back higher from its lows of 100,000. It briefly touched to as low as $99,000 last week. Volatility is back down. It is back under 19 after getting whipsawed all day on Friday. It got up to as much as over 22, almost 23, and of course selling right back down as markets are recovering well within structure. Now, there's a couple things I really want to mention is S&P 500 and Nasdaq's technicals, because if you come take a look at the Nasdaq here, composite, we are expecting a nice little gap up. So QQQs are indeed up a little bit over 1.4, almost 1.5% really. So we are going to be pushing higher, but the 50 simple moving average, that is the most important moving average right now that I think everyone needs to watch, because as you'll notice that we got down to that point on Friday, buyers indeed stepping in. We were briefly, for a very brief moment, trading below that 50 EMA, and we'd be breaking a triple-digit streak for the Nasdaq if we were to break below that 50 EMA. So that level is 22,664, and for QQQs, that level is going to be sitting at around $601 per share. So obviously you can see pre-market, we're gapping back higher, but on Friday we tested that level with the buyers stepping in, similar to what we experienced right here in the beginning of September, end of August, as we did gap down, right? So the Nasdaq was from its all-time highs at one point down a little bit over 4%, gap down, but intraday buyers stepping in, and we were off to the races, and then we continued to move higher to new all-time highs. We saw another 7% gain for the market before the next dip. Is this going to be something similar? Of course, we'll find out. Time will tell. But just to give you an idea that we're still well within structure here, if you were to break below this 50 EMA, that's when I would be very cautious, expecting a bigger downside to the market moving forward as well. But right now, we are well within this uptrend of higher highs and higher lows as well. So thank you so much for joining, everyone. Appreciate you all. Good morning. Vamsi, Jeff, Vin, Pratesh, Jordy, everybody, thank you so much for joining. Just let me know if the audio and the video is good, and we are good to go. As volatility is back down pre-market, we're seeing a lot of momentum. Nvidia is back up to over 194. We got Tesla up over 2%. We got, of course, S&P 500 and Nasdaq, as well as individual stocks like SoFi is up over 3.4. Palantir is pushing higher, also up over 3.3. We got BMNR pushing up over 8%. BITX on the back of crypto or Bitcoin is up over 5% as well. We got Meta Platforms up a little bit over 1.3% as well. So yes, we're seeing a very strong momentum coming in for the markets here at the beginning of this week. We also do have inflation data that is expected to come out. Again, expectations are high, but with the government shutdown, we're going to find more about that later this week. But if there is going to be continued delays, then that is going to be 2 months in a row of no unemployment report. And last month, obviously, we got the inflation report, which was delayed, came in better than what the expectations were. But this week, I am pretty confident that is also going to get delayed once again. But really, I mean, from a political perspective and, just overall, with the tariff stimulus and the subsidies being announced, I mean, they're really trying to keep this market afloat here, even though the volumes are lower. And technically speaking, the markets are showing signs of weakness, right? So there's a lot of individual stocks that have seen, massive liquidations, right? They've seen institutional money exiting their positions in the third quarter 2025. Which is what we have discussed in our previous updates as well. So we'll see how November is going to shape up, as November has historically been the best month with a very high win percentage. We're talking 75 to 76% win percentage. And of course, we'll find out if that is going to hold up or if it's going to actually end the streak for this market after 6 straight months in a row of gains. So coming over to any update on the yen carry trade and what the outlook is in 2026, Pratesh, I think it is not as significant of a market catalyst as it was last year back in August. But yes, any kind of interest rate decision from Japan is going to most certainly affect that trade. And so as a result, we obviously have to keep a close eye on what other central banks all over the world are doing, because it's not just about the Federal Reserve, but also the central bank over in Japan, in the UAE, in Asia, in London, in Europe, all parts of the world, obviously, because monetary policy is important for each country, but also for global banking as well as capital flows all over the world. Because at the end of the day, capital can always be invested in different opportunities if the risk reward is good. That is really what it comes down to, right? Because risk reward is, in my opinion, the most important core focus for all investors, because you start to look at asset classes very differently, right? Very, very differently. Because once you start to understand risk management, on a very greater detail, then every asset class becomes a study of its own. And it starts to make a lot of sense. It starts to make so much more sense than just looking at the surface level details. And so that's what I've dedicated my life to doing, is this understanding as much as I can about risk management, whether that's stocks, options, real estate, all these different markets, and really just trying to become an expert in this and learn as much as I can with how all of these things work, because that's, at the end of the day, is really what's important. And it is quite addicting, right? Investing, trading, it is quite addicting, because once you get married to the game, you're like all in, dialed in. We were talking about this in our Discord earlier. One of our new members was like, even on a Sunday, the chat is like ongoing. It's like you're just literally like, people are talking about markets, money, stocks, trading, investing, all of it is just ongoing, even on a Sunday. And then, of course, I responded to that new member. I was like, 100%. Even if you're MIA for one day, you're going to come back to 500 plus messages. People literally don't have a life in this chat, including myself, because we live and breathe investments so much that all we're doing is constant discussions about where can we make money. That's literally it. That's the entire essence of the conversation. At the end of the day, like, whatever we're talking about, it all has to boil down, okay, where's the opportunity, right? What's the risk reward? Where's the opportunity? So, all right, good morning, everybody. Again, thank you so much for joining. Early rocket this morning, Mark says. Yes, absolutely. We're seeing a nice little move to the upside. What are your positions for today? You know what? Let me just pull up the portfolio very quickly so everybody can actually see that. I'm just going to log in to the account, and we're going to show you the options portfolio. We're going to take a look, because we're seeing a very nice, momentum higher for this market. So I will just bring it up. 1 second. All right, so we'll take a look at the markets here. Of course, pushing higher very nicely. I still have to do the options update for week number 45. This week, last week was, of course, pretty red. So we're going to see a pretty wild red week, because NVIDIA was down quite a bit. So if you come over to NVIDIA's weekly chart, it tanked over 7%, right? NVIDIA was down 7% last week. Tesla was down over 5.9, almost 6% last week. And SoFi was down almost 5% as well. So last week obviously was brutal for my portfolio, for my options portfolio, because a lot of my positions, including BITX, down over 11.67%, and then Meta is a brand new position in the portfolio that I'm slowly and steadily building, was also down 4%. So that is, going to be updated, but it was brutal. But right now, pre-market, all of those losses are getting recovered. It is up over $11,000, almost $12,000 on the day. On the back of course, BITX, Iron, which we've also been building that position. $75 call, it's up over 5.6% right now. We've got NVIDIA, Oscar. Oscar also has been struggling quite a bit. Pre-market, it is down another 8.4 because of the health insurance and, of course, the tweets from Donald Trump as well over the weekend on Truth Social. Obviously sending, and again, a lot of downgrades also coming in from a lot of analysts. UBS downgrading or maintaining their sell rating on Oscar stock. So that is the one that's struggling. But I do have a couple of covered calls that are going to print today, the $20 calls. I'm mostly going to close those out and then sell new ones. I'm mostly going to be looking at the money calls now for Oscar, because of the fact that it's been selling off quite a bit. And then, of course, we've got Palantir, SoFi, Tesla, But all in all, portfolio jumping pre-market quite a bit. So good morning. I always wait until 1 a.m. on Sunday UK time for pre-market to open. Then I sleep. Yeah, it is difficult with different time zones to really trade the U.S. markets. Nvidia looking very good in pre-market. The Taiwan deal boosted it. I think it'll sell at market open, then buy again. So with these gap ups, again, I would be careful because a lot of the times intraday we do see markets pulling back after the huge gap up. So my focus today is going to be whether this volume and this move holds up, or are we going to see a fade of this rally? That's the real question that I have is, are we going to see this fade, entire move down? If we break even on the day today, I think that's a huge signal the market really wants to go down. Again, I'm not one for making predictions. As you guys know, I never make predictions, but it's really about understanding price action and volume. And if, for whatever reason, markets even test break even today, if we fill this entire gap to the downside, as you can see right here, for QQQs is down to 612, that's going to be an intraday drop of about 1.5 or just over 1%, then that is serious weakness on the market's part. And I think we have to be on high alert if there is any kind of accelerated selling pressure, and especially the 50 EMA. That's really what I'm watching, because if the QQQs breaks below 601, right now we're at 619, but 601 is the 50 EMA. If you break below that level, then I do think short term it is game over. Short term because we'd be breaking a huge structure. Technically speaking. Fundamentally, yes, it's going to be great news for us as investors because we're going to be looking to buy more stocks. Volatility is going to be higher. Money Invest Index is going to be lower. So we're going to be looking at deploying capital and dollar cost averaging, and risk reward is going to be much better. So we can turn up the dial to being more aggressive. But short term, there is going to be more pain if we were to break below 601. So that's a level. That's a key level to watch. For S&P also, the 50 EMA held up really well on Friday. So buyers indeed stepping in. Although we did break below this resistance of 67.70, right? So pre-market, if we are jumping over 1%, 1.5%. So the question is, are we going to trade back below 67.70? Or if the S&P is going to hold its level on decent volume as a support? So that's the real big question for today is, are we going to see the market hold or fade on the day today? So let me just do a very quick poll on that very question. So all I have is hold or fade for the markets today, for S&P, NASDAQ, everything, for the entire market. Hold or fade. All right, good day, caddies. CELH at a good entry point for a swing trade. I do think there's a couple really good swing trade opportunities that I want to bring to your attention first. First is going to be Dash, so keep this on your watch. It has gapped down heavily. I'm watching this area of support right here. So inside this green rectangle, we're talking anywhere from 178 to 185, 186. So anything inside this green rectangle could be a good, dollar cost averaging, good buying opportunity from a swing trade perspective. Resistance back up to 213 to as much as, of course, 230. We've got a massive gap to fill. Another one I'm watching is Microsoft. I think Microsoft is overlooked right now. I think this absolutely needs to be on your watch list as a potential swing trade, because you'll notice we've seen 2 back-to-back red weeks for Microsoft. It's been selling off. Oversold incredibly. On an RSI, MACD, it's trading down to a very strong support. And well, look what happened, right? Last time it was here back in September, we had a nice little 8% rally. It pulled back a little bit and eventually went up to all-time highs, another 12.5%. Again, nothing to write home about, but a nice swing trade opportunity here, given it's a blue chip stock, oversold, trading at a support, 2 back-to-back red weeks, something to consider. Another one is Mercado Libre, right? So Meli has been selling off quite a bit after last couple days after the earnings. So it's down a little bit over 13-14%. On a weekly time frame, this actually looks pretty attractive. I would still point to the fact that it is showing signs of early weakness. So if you do break below this higher low, 1930s is going to be a support all the way down to 1700. I think 1700 is like a very attractive price for Meli. So that's going to be my price points around 1930 and 1700. Dollar cost average and start a new position and be a lot more aggressive at those prices. So those are like fundamental levels, but technically speaking, we are at that higher low. at a pretty reasonable support. So if we do get a nice little swing, we're looking at a resistance up to 2,600, right? So it's a nice 25% for not a lot of risk. I mean, if it does break below 2,000, that's a 5% worth of risk for a 25% potential upside. So it's a nice 5 to 1 risk reward ratio here for Mercado Libre. So those are, those are some things to obviously consider. And there's a few more that I was mentioning in our Discord. So Microsoft, Melly, there was one more M stock. There was 3 M's. Microsoft, Mercado Libre, and there was one more stock that I mentioned from M. I'll have to go back and check in Discord. But yeah, those are the ones. And then Fortinet. Fortinet was another one. Not a stock that starts with M, but Fortinet is, obviously we talked about it last week, but then it got bought up fairly quickly after the earnings, after the huge gap down, and support level $72, $73 is going to be that level to watch for Fortinet. So nice little recovery back up. Again, very strong, profitable company, great earnings and cash flows, excellent balance sheet. Margins are strong. If you come take a look at the valuation, 33 times earnings, 25 times cash flow. You could argue it's a little bit up there, given that the growth is not as aggressive as some of the other cybersecurity stocks, but it's a stable company, right? And so resistance all the way up to as much as first one's going to be $87 right here, all the way up to $93 for Fortinet. So that's another one to certainly have on your watch list. Meta. Yes, Meta. It was Meta. Thank you for reminding everybody. It was Meta. I completely forgot about that. Yeah, so this is another one to definitely put on your watch list. Nice little recovery. I did pick up Meta, by the way, pre-market. Completely blanked out. So yeah, that is going to be that resistance at 680s. That's the target, 680 to 690. And we got a support level right here in the low 600s for Meta platforms, right? So again, coming over to the RSI technicals, very oversold. Pretty strong demand here. So even on Friday, we had buyers stepping in. So on the lower wick, low for the day, 600s. Obviously, 590 is my light buy. So you can see how close we are now, right? To the light buys of 590, 550s. We're getting closer. But even right now, I mean, the risk reward is very attractive for Meta platforms. So resistance all the way up to 686, 690 for Meta platforms. So that's that. Let's see. Oracle, let's take a look at very quickly because that one's also been selling off. But I have a very specific price that I want to mention for Oracle is around 218. I think that's the level that every investor trader needs to be watching. That's a good pickup right there, aligned with that previous double bottom there. For Oracle, it's going to be pretty oversold. And we are going to be at the pre-earnings price. Like this is going to be all the earnings momentum, the entire deal with the OpenAI, everything that was priced in is going to be completely erased after this entire sell-off down to 218 to 216. So I think that's going to be a good pickup there, down to as low as 194. So anything under $200 makes for even a better deal for Oracle. So very oversold right now, and resistance all the way up to 262 to as much as 275 right now. But watch 216 to 218, somewhere between those two levels, very, very attractive for Oracle there. Okay, CELH, let me just quickly go over that. I know that stock's been selling off aggressively, 2 back-to-back pretty strong red days. Support level is 39 to $40, and it's a huge structure that's just been broken down from this higher high and higher low pattern. This is going to be turned into a massive resistance now because it's now gapping down and trading below these levels. And we still have a huge gap to potentially fill in. So makes for a decent swing trade only if $40 is your stop loss. Like that should be a fine line in the sand that you're not going to trade it below $40 and you're just going to get out, unless of course you're looking at it fundamentally as a long-term opportunity to just continue dollar cost average into it. Then yes, $40 down to as low as $34, $32 makes sense from a long-term perspective. But I would keep a close eye at 40 with a resistance up to 40 at $49 right now. Okay, let us know the possible how and what strike price to choose to sell covered call options, but still plan and hope to keep the underlying stock weak versus 2 to 3 weeks out, etc. For example, Meta. So that's a great question. Ideally, if you are planning to hold the stock, right, there's a lot of things to consider, right? If you are somebody who is in a, let's say, a very high tax jurisdiction, right? Of course, a lot of the US, Canada, short-term, long-term capital gains tax. The last thing you want, obviously, is if you've got a sizable position with a sizable profit, last thing you want is to let go of your shares and incur a taxable event. So in those circumstances, I think it's really important to just let your shares be as is, not sell covered calls, because if for whatever reason they get in the money, stock starts to rally hard, gets in the money, then you get into this cycle of rolling options and closing them for a loss. So if your end goal is by every means possible, I just cannot sell stock, I just don't want to sell my stock, this is a long-term position, I don't want to incur a taxable event, I want to hold on to them, then the most important thing is to not trade covered calls. That's why we make that distinction in our own community and our own analysis and philosophy, is to keep your long-terms separate from your options trading, right? Why? Because with your option stock, right, you can have the same shares, same stocks in both portfolios. That's totally fine, but you have to treat them very differently. If it's a long-term, it's a buy and hold, you just keep it, forget about it. That's what it is. If you're trading options, then yes, you can trade covered calls, even though we kind of approach with this idea that I want to hold on to this asset for as long as possible as it continues to appreciate. Great. Like for example, Nvidia, I've been rolling it for over a year. I want to hold on to it. But if tomorrow Nvidia gets sold at the market price, that's fine. I mean, I would capture in a massive profit and all the premiums that I've collected over the years, over the last several months and just over a year. And I'm okay with that decision, right? So it's, if you want to hold on to Meta and you just don't want to get rid of it, then I would say, maybe not sell covered calls and have a separate portfolio where you have Meta and you can trade options. But if it is already in the options portfolio, you're like, okay, I don't mind, selling my shares for Meta, then I would wait for a good green day. Like for example, pre-market, it's already pushing higher, 1.4. And ideally, again, as a general rule of thumb, we also like to sell covered calls when the stock is overbought, at a resistance. Right now, we're kind of getting started on this recovery or this potential reversal for Meta. So I'd be looking at it at 670s for a covered call that I would sell. That would be a pretty nice level to consider for Meta platforms. So, so that would be my very quick take on that. Let's take a look at Micron as well. I was wondering the easiest way to calculate the difference in cost basis if an investor has a $15 cost basis and went ahead and purchased that same stock at a higher price. Okay, so the easiest way to do that is if you open Excel. Let's just open Excel here. So the easiest way to calculate your cost basis, is that what you mean? Like the easiest way to calculate your cost basis, right? Difference in cost basis. You mean the difference or the total cost basis? You want to calculate if you're purchasing shares, different quantities at different prices. Let me know, and then I can kind of go show you that with an example. It's very simple, actually. It's not that complicated. It just does require a little bit of, having a spreadsheet. There's a lot of calculators online as well that can help you calculate your average cost basis. You just have to plug in the quantity, the shares purchased, and then just help calculate it. It's going to calculate it for you. But you can also do it yourself on a spreadsheet. All right, so let's take a look at Micron first. It's been running. It's been running a lot. It's been running away, up another 4% pre-market. This has been a very, very strong stock. Weekly, very overbought, obviously, but this is one of those companies that, in the semiconductor space, we've been talking about a lot of semiconductor stocks here, and Micron's just taken off, right? 300% from its lows of $62 up to $250 now. Absolutely incredible. Just absolutely incredible. Congratulations to all traders and investors here. But again, technically, are you going to be a buyer here? Obviously not. Very, very overbought, extremely extended to the upside, sitting at an all-time high right now. So any day, there's possibilities for a sell-off. So I'd be very careful, in and around these levels. 156 is going to be that support. I know before you even say it, it's going to be like, oh, that's so far away. Yes, it is 36, 37% because we haven't really seen any kind of a substantial drop in Micron for a long time. It is also in a very tight uptrend. So that's the channel within which Micron is trading. So that's where the dip buyers keep stepping in. But if you do get a breakdown or a break of this uptrending channel, then there's a possibility that we do hit lower levels, and 196 could be another support to watch for Micron. Okay. For example, 200 shares of Palantir, 15 cost bases with risk management in mind. I would like to calculate Palantir I bought more shares at its current price today. So yeah, I mean, if you want to calculate cost bases, all you have to do is just plug in $200 at 15 shares, and then you have to calculate how many shares you want to buy today at whatever the price is. Like, for example, Palantir right now is sitting at 183. Right there, you plug in that price and then plug in how many shares you want to buy. Let's say you want to buy 100 shares. So all you have to do is just sum up the number of shares, sum up the total investment that you've made. So this is going to be that. That's going to be this. Sum this up right there. And then you have to divide this number with your, divide the total investment by the number of shares. And that's going to be your new cost basis on that stock. And of course, if you get up to 200, that's equal weighted, right? So essentially 250%, 250%. So ideally it should be like 198, divided by 2. So that's $99. That's exactly what we got here. So again, if you want to calculate the proportions, that's where you can make this table a little bit longer. You can go all the way down here and you can plug in, okay, another 100 shares picked up, another 100 shares picked up, another 50 shares, another 200 shares. You plug in all the different values here, and then you calculate all the amounts that you've invested, and it's going to sum up the entire thing. And it's going to tell you exactly what your cost base is going to look like, 143.47, so on and so forth. So that's what it is. Just put in the shares, put in the quantity and the amount purchase price, and then calculate how much the total investment is, and just divide those two numbers. Okay. Do you employ sell rules, AV? So yeah, I mean, we have a video on Patreon. So we have done a full comprehensive video on our Patreon going over exactly when I would be selling a stock. So if you come over to collections, by the way, stocks in personal finance, I mean, this is, I highly encourage everyone to check it out, because there's a lot of videos, a lot of timeless videos that you can watch, and obviously you get a lot of information around our investing psychology, when to buy, when to sell, portfolio rebalancing, avoiding costly mistakes, leveraged ETFs and how their prices are calculated, a lot of things, right? What metrics matter for the market, doing a full study, percentile analysis, my portfolio breakdown, spreadsheets, everything. So this is included for everyone, and I highly encourage you to check that out. So this is the video that I did not too long ago. So portfolio rebalancing, investing checklist, and portfolio rebalancing, right? So this actually goes over when, we would sell a stock, when it would be appropriate to actually exit out of a position. And prior to that, I think it's really important for investors to also watch this video, which is avoiding this costly mistake, because you don't want a mistake to turn into a blunder. You don't want anything that's a mistake to turn into a disaster. And that's what this video helps you avoid, which is not to let a 20 to 30% loss turn into a 60 to 70 or 80% loss, because then it becomes irrecoverable, right? You can't really, the probability of recovering a 90% loss is very, very slim. So that's what we want to avoid. And so we've got these thresholds that if you are down, let's say 10%, 20% on a stock, it requires you to revisit that story. And ideally, it should really not be anything over 30 to 40%. If you're down on a position over 30%, 40%, then either you are buying aggressively, your dollar cost averaging, if the thesis is intact, or you are biting the bullet and getting rid of it. Because otherwise, if you don't do anything, if you just let it sit there and that 30% turns into a 40%, then it turns into a 50%, 60, 70, 80, then it's just dead weight. It's dragging down your portfolio. It's costing you opportunity. So there's a lot of things to consider there. So that's why we want to be, if you're an active investor, you have to be watching your positions. And that's why fewer the better, because it allows you to have a concentrated approach. And I've learned that over the years, that concentration obviously builds wealth, diversification keeps it. And as a result, the more focus and time and attention you can actually dedicate to a handful of opportunities, the better it will be, other than just like spreading yourself too thin, focusing on so many different opportunities, because there's a lot. Market is one big candy store. You can be out there looking for something, and then another candy pops up. Another sweet and sour candy will come up. Every single day, there's going to be a bunch of candies thrown at you, and you are like a kid, literally on Halloween night. You're going to want everything, but with everything, you have nothing. So that's what we have to do, is just pick and choose our battles, risk reward. That's why it's so important. And that's what we focus on. All right, so market's about to open. Just a quick rundown on where we are. QQQ's up 1.5%. S&P 500 also pushing up over 90 basis points. You got Nvidia. Tesla's starting to fade already. So we're seeing that momentum sort of fade a little bit pre-market. So the poll that we have going on right now, 65% of people are expecting for this market to hold its gains. 35% expecting for this move to fade. So essentially it's 2/3 of investors continue to believe that, okay, we're going to see some nice stability in the market here after last week of brutal sell-off in technology. But 36% do expect some fade here. So we'll see what happens. I would be on the fade camp as well. Only contingent on volume. If the volume picks up throughout the day, then yes, this can hold up. But if the volume is really dry, then we could fade fairly quickly here. Okay, let's see. Can you tell me why Open is going to split shares 31.30? Saw it on TradingView. Let me just take a quick look. Open Door, I think the last time I saw was, seeing a lot of, we're seeing 31 to 30 split. That is insane. So they are doing a pretty aggressive split there. So that's what it's going to be. So there's a forward split and a reverse split, right, for a company. But I think it was going through some kind of acquisition or merger talks, which is why there might be a deal structured in place for this kind of split. $1.2 billion direct stock offering, offering up to 180 million shares of common stock. Yeah, so I think they're offering a ton of shares here, diluting like crazy. And weren't they actually on the brink of bankruptcy as well? I think, or was it some other company? Because I think the last time I was looking at them, they were doing a lot of restructuring to try to stay alive. Okay, Adobe, Mike, thank you so much for that. The education tier on MoneyVest is priceless. Please check it out if you're looking for help with your investments. Yeah, and the thing is that I'm happy to schedule calls with everybody. As an introductory call, we have a 15-minute free time one-on-one with me, and that's exactly what I want this community to be, right? It's a small, well-knit, well-connected community because you are literally getting, attention, priority, and help that you need with your financial journey. If there were, let's say, 10,000 member Discord, I wouldn't be able to dedicate any time for anyone, and it would just be one big noise and chaos. But because it's like a smaller family, I'm able to literally respond and learn about stories of every single member. I've met probably like a couple hundred already, I think, in the last 4 or 5 years. And I've spoken to at least 400 or 500 members. So that's the goal. Is I keep telling this on Discord, I want to meet every single person, and that goal is going to be achieved very soon because I'm going to meet every single member at one point. I want to. That's the whole idea. Is that I really want to give you the attention and the help that you deserve. So any questions, email me. My email's always open. Zoom calls are always open. So definitely available. All right, so should we be expecting another bearish day for IA? So let's just go over some stocks, right? So whatever stocks you want me to go over, just shout them out. And also, if you can share any kind of context, are you looking for fundamentals, technicals, long-term, short-term, tradable strategy, options, long-term, whatever it is, this stock and some context so I can, give you the more insightful answer. Iron's support for Mario. So let's take a quick look here. Iron's got a pretty strong support down as low as $48, $49. We were there towards the end of October. Then we had a nice rally, 58%. It is still in the context of a nice uptrend because we haven't really printed a lower low yet. But I would argue that it is starting to show some signs as it is trading sideways. So it's putting in a equivalent high or a horizontal high. And so if it doesn't break out over $74, $75 and starts to fade lower than 48, $49, a very important level to watch. Okay, none. UNH, but I need more info. What do you need from me regarding that stock? Fubo long-term and fundamentals, please. Let's take a quick look at Fubo TV. So consolidating sideways, it's been on a very good recovery, but it's also what I would say is a very good tradable stock. So if you're looking at Fubo, their fundamentals are indeed struggling because revenue is growing, margins are getting better as well, but quarter over quarter, last 3 to 4 quarters, it's just been trending downward, and margins have gotten worse. They're trading at over 9 times cash flow, a little over 10 times earnings, which is a very cheap and attractive valuation. But earnings-wise, because of their massive losses, this is not showing us the exact scale. But yes, earnings are expected to get better. Not in 2026 because they're expected to generate losses, but then 2027 and beyond expected to re-accelerate on that growth. But it's a good tradable stock, I would say. Very strong support down at 330s, 320s, and resistance up to 440s. So that $1 range is exactly where Fubo TV has been trading. Traders have had a dream stock here because you're just kind of buying at support, selling at resistance, and you're pocketing on a pretty nice run up of 30, 32%. This right here is a nice 35%. This right here is a nice 42%. Okay, Tesla, we can take a look at here. Bali meeting. Yes, Mark, we definitely have to do one meeting in Bali next year. Next year is going to be big because we have the World Cup in the US as well. We've also got the 5-year anniversary for MoneyVest. So MoneyVest is officially going to be turning 5 years old in February 2026. So I think that's going to be pretty cool. And then towards the end of the year, we're going to be planning a meetup, like an annual meetup like we always do. And I think Bali is definitely leading as a contender for the location, depending on how the year also goes. Imagine 2026 being a brutal year, but we'll still meet up. We always meet up. We also did a meetup in 2022. So 2022 was a brutal bear market, but we still met up with a lot of members. So regardless of the year, we always do the annual meetup. Okay, so Tesla up over 2.2%, consolidating sideways a lot. So this is, the area of consolidation, resistance at 470, support level roughly at 412, 413. So it's really been trading in that range, and you can see how close to the price action we are. And it's a good thing that Tesla is stabilizing here despite all of the catalyst, all the economic data, all the earnings and everything. Tesla seems to be validating this area, right? We're just stable, right? That's good. It's good to actually see Tesla not volatile for a few months here because it's been giving a lot of investors gray hair for the last few years. I think it's good to see. And I'm actually, for one, very glad that Tesla has been holding up these levels very well. And it's not giving us a lot of volatility, even though it's a high beta stock, but the range really has been $20, $30 for Tesla. It's been fluctuating between 430 and 460 for the last couple months. So I like that for Meta. Adobe for the long term. Adobe, I've had this love and hate relationship with Adobe as a consumer because I don't like the fact that they keep raising prices every single year, and also that they don't have any kind of packages that removes all the waste that I don't really need. They've got a whole bunch of applications and the Creative Cloud and the whole suite of applications, 95% of them I don't use. I only need 3 applications. Only 2. PDF and Premiere Pro. That's it. I don't need anything else. But individually, they are so expensive. It just almost doesn't make sense to get them individually. So you get the Creative Suite, and then most of the apps are just like wasteful. They're just sitting there. It's not for me, right? All I need is just my PDF documents. That's it. So that's the love and hate relationship as a consumer. As an investor, their fundamentals keep improving. They are doing well. Revenues are growing. Although there is a lot of competition in this space, but they do have a defensible moat where the switching cost and the overall creative space where people need to get familiar with the software. DaVinci Resolve, I think, is definitely taking a lot of market share for them because it's a one-time fee for a lot of editors. You get a top-tier, editing platform, and you don't have to run through these subscriptions because, man, Creative Suite is not cheap. It's expensive. You're paying $600, $700 a year, whereas you can get top-tier editing platform like DaVinci Resolve for like $200 lifetime, $250 lifetime, and you don't have to pay anything more. So it just almost doesn't make any sense, to go with Adobe on a subscription basis. So I think that's really been somewhat hurtful to the overall reputation. They also did drop the ball a little bit on AI. And now the feedback's been that they're now so much into AI that they're not actually improving the functionality of the platform, but really just doing things that don't really need to be done by AI. But that's really where it is. Technically, of course, lower highs and lower lows. We got a very strong support down at 325, 326, resistance up to 367 right now for Adobe. But those are my quick thoughts on this stock here. Get that red mic service, caddy. You probably will need it for the long time in 2026. Yes, it's coming. It's coming. I'm definitely bringing it out in 2026. Just for fun anyway, because even if we don't see a bear market, even if we don't see a sell-off, I think it's going to be very, very useful, and I think it's going to be fun. What is your thumb rule on portfolio diversification? Should not be more than 5% on each position. So I would say there's no exact rule of thumb. Your percentage allocation should depend on what exactly? Let me ask you guys. What should your percentage allocation on a stock really, at the end of the day, what should it really depend on? Two things. It's a combination of two things. So let me see. We've got 350 people. Your percentage. Yeah, so Walter, we're planning the Europe meetup later this year. I know it's going to be a little bit of a tight squeeze for 2025, but we're going to make it happen. I've just traveled a lot this year, and I'm taking a bit of a break last couple months, and then I'm going to be doing that in December. So December, most likely, fingers crossed, we'll make it happen. If not, then we'll do it early next year, January, for 2025. Yes, Arun got it spot on. Spot on. Conviction and risk management. Those are the two things that matter most when you're trying to figure out how much do you want to allocate to a stock. First thing is your conviction. And I know nobody can assign a numerical value to your conviction. You can't be like, oh, I am very confident or not that confident on a stock. That's okay, but you have to assign a numerical value. If I were to ask you, has anyone seen Billions? In Billions, they always ask you, how certain are you? What's your level of certainty, right? So they assign, some kind of a word or a number to their level of certainty, their level of conviction in that stock, and that's really what it comes down to. Your confidence or your conviction level, plus your tolerance for risk, your tolerance for volatility. Those two things combined will tell you, how much you'd want to allocate. I know that people believe hardcore crypto, Bitcoin is the future. I'm okay with the volatility. They're 100% Bitcoin, right? Some people might be 100% Tesla, might be 100% Nvidia, right? That doesn't mean that's a right or wrong way to do it. It just means that they're really, really confident in one single bet. And that's really where wealth is made or lost, is concentration. As I said, concentration builds wealth and diversification keeps it. So yeah, markets are open now, so we're seeing a nice little move to the upside, and I'm going to turn off my V-Bull. Tesla pushing back up to 443. I got Nvidia 194, and then the portfolio is also open back up to 315 right now, so all-time high is closer to 330, so we are still a little bit of ways away from getting up to all-time highs, but $6,000 up on the day so far. Not bad. The total open P&L sitting at 115 right now for this portfolio. So thank you so much for joining, you guys. I really appreciate it. Again, link's going to be down below if you're interested in joining and getting access to all the videos. Everything is going to be available here. Stocks, personal finance, options trading, fundamental analysis, technical analysis, psychology of investing, which I think is one of the most underrated educational tutorials and videos that you can watch. Like this is, after all the books that I've read, after all the analysis and research that I've done, this is 21 videos that goes over psychology of investing, which, goes over everything. Markets are emotional, price versus value, your main goal as capital preservation, everything. So links are going to be down below. Let me know if you have any questions. Email me at admin@moneyvest.com. And as always, happy investing. I'll see you all in the next